Okay, welcome to this very special webinar. My name is Dr. Steven Sussman. I am a professor of public administration at Barry University in the Andreas School of Business in Miami and co-founder of the Palm Beach Center for Democracy and Policy Research. Dr. Luis Fleischman and I, along with a team of dedicated colleagues, established the center as an outlet for the marketplace of ideas. The Palm Beach Center for Democracy and Policy Research is a nonpartisan public policy organization, a research center, and a think tank. We are a gathering of scholars, experts, and community stakeholders engaged in research and dialogue in an effort to create practical policy recommendations to current local, national, and international challenges. Therefore, the center encourages discussion and research from multiple perspectives. We believe that good policy is the result of reasonable dialogue and healthy debate. We believe in the marketplace of ideas. Thus, through publishing balanced articles and community engagement, the center aspires to provide a platform for critical thinking, analysis, and ideas to confront challenges that affect our world. So please visit our website at palmbeachdemocracy.org, and certainly you can click the donation button at the bottom of the front page. Tonight, the Palm Beach Center for Democracy and Policy Research is thrilled to present a very, very timely and compelling webinar titled A New Era of Digital Asset Foreign Policy, the Impact of Cryptocurrencies and Digital Banking on Foreign Policy, featuring Michael Greenwald, and among many other accolades, he is a Harvard Kennedy School Belfer Center Fellow. Shortly, Luis will officially introduce him. We welcome your questions. You can write your questions in the chat box. You can also email me your questions at Stephen, S-T-E-P-H-E-N, at palmbeachdemocracy.org. During the question and answer period, you can raise your emoji hand and ask a question as well. Now, I turn it over to Luis, who will give the formal introduction.
Okay, good evening, everyone. I'm so happy you are here. And one thing I want to just to remind all of you is that the Palm Beach Center for Democracy and Policy Research is continue with these programs on a plethora of topics. We try to keep up with what is going on in the world. Today, we are going to deal with the issue of cryptocurrency, and I will give an introduction and introduce Michael Greenwald. But hopefully in a couple of weeks, we may host Mary Beth Long, a former Assistant Secretary of Defense, that is going to discuss the current standoff between NATO and Russia. So we are trying to provide programs and articles on things that are current and are relevant to the life, to what is going on in the world and what affects the United States, what affects democracy, etc. Now, today the topic is cryptocurrencies, right? And you saw the title, the relation between digital assets, cryptocurrencies, and how it affects foreign policy. Now, cryptocurrencies have become increasingly popular over the past several years. And today it is estimated that roughly 14% of the US population owns some form of cryptocurrency, right? And about 46 million Americans are now invested in Bitcoin, which seems to be the most popular coin or cryptocurrency. Some have welcomed cryptocurrency as a good investment. It doesn't have borders. It's accessible. It's a flexible currency. It can be used to purchase almost any good, from an increasing list of places and facilities, right? In addition, but cryptocurrencies, I would say, such as Bitcoin and others, are decentralized currency. That means they are not regulated by a government or central bank. That means that there is also no viable way that taxation could be implemented for Bitcoin. That's another element why, you know, these cryptocurrencies are becoming popular. But precisely because cryptocurrencies are not regulated, there is no legal protection, right? These transactions are mostly anonymous, not regulated, and they are also irreversible, okay? So that means that if there is a bad deal, it's difficult actually to reverse it. Now, people, you know, the Center for Democracy and Policy Research has dealt in the last 3 years with a lot of issues related to national security and foreign policy, an issue that is concern to us, particularly what is going to be the future of, I mean, could cryptocurrencies provide a way for sanction evasion? Can it provide a way for criminal transactions and money laundering, given their easy access, lack of regulation, and anonymity? This is why we are here. Tonight, we have an expert. Nobody, I cannot think of anybody better than Michael Greenwald to talk to us about these issues. And maybe he will help us clarify some of these issues and the impact that cryptocurrency and digital banking could have on national security and foreign policy. Now, a little bit about Michael. Michael currently serves as the Senior Vice President of Tillman Advisors, where he is the Director of Digital Asset Education and a senior member of the Business Development Strategy team. Mr. Greenwald has had previous senior roles within the United States Treasury in positions working in places such as Africa, Europe, and he also served as a financial diplomat in the Middle East under Treasury Secretaries Geithner, Liu, and Mnuchin. He served as the first United States Treasury attaché appointed to Qatar and Kuwait, and opened an office of the Treasury in Doha, in Qatar, in 2015. He was also an advisor for Europe, where he was appointed as the head of the US delegation to the Committee of Experts on the Evaluation of Anti-Money Laundering Measures and the Financing of Terrorism before the Council of Europe on Strasbourg. He was part of the team that crafted US sanctions against Russia. And of course, he was also involved in issues related, financial issues related to countering ISIS, Al-Qaeda, Hezbollah, Hamas, Iran, Russia, Syria, and North Korea. Greenwald also has an interesting academic background. He's currently a fellow at the Harvard Kennedy School's Belfer Center for Science and International Affairs. And he's also an adjunct professor at Boston University, where he teaches global policy on countering terrorist financing. He has a law degree from Boston University, a Master of Arts from Boston University on Global Studies, and a BA in History from George Washington University. Ladies and gentlemen, without further ado, it is my pleasure and honor to give the floor to Michael Greenwald.
Thank you very much. Thank you very much, Luis and Stephen, and thank you for the Palm Beach Center for Democracy. It's a real pleasure to be back with you. We were commenting before we started tonight. I was at the inaugural kickoff event, and so nothing makes me happier than full circle. And it definitely feels like we are at a digital asset inflection point. And there's many areas I want to cover this evening, and I'm happy to answer all your questions. I hope you ask me the hardest ones. And, but when I worked at Treasury, I worked on tracking Al-Qaeda and ISIS in the banking sector and outside the banking sector. And post 9/11, the United States did an excellent job of pushing illicit actors away from the formal financial sector. But what that did is that Al-Qaeda, Hezbollah, ISIS, Iran, others, adversaries of the United States, state and non-state actors, they got very good at operating outside of US SWIFT capabilities, global messaging service. And so a lot of the ways Al-Qaeda moved money, for example, pre and post bin Laden, was through Hawala, was a very close way to move money with no notes, no ledger, right? And so I've seen the evolution of these threats firsthand. I had an opportunity to work with Treasury in our legal office, our intelligence office, our policy, and our diplomatic office. And I really had a unique way to see all of our capabilities come about to really go after the illicit actors. In 2009, when I was at the European Parliament representing the US, digital assets were called virtual currencies. And the United States Treasury still refers to them as virtual currencies. And I remember that first conversation with different European delegations about this. And so, where are we today? How did we get here? What does this moment mean? And what is going to occur going forward? And what does this all mean for the future of money? So I want to take you back to 1999, when the euro really came into existence. And back then, global central bank reserves had 75% US dollars in global central banks. I just want you to just think about that, 75%. More than 25 years later, okay, global central bank reserves today is less than 60% dollars. We're at 57% right now and dropping. You may say, well, why does that matter? How does that affect me? How does that affect our grandkids? Well, I'll tell you how. Our strategy, the United States strategy since 9/11, going up towards going after Russia, when I was there in 2014, the same playbook that we're seeing playing out right now, going after Iran and going to banks, going after Al-Qaeda, then ISIS and other actors. The United States weaponized the US dollar. It was the tip of the spear. And being able to utilize the strength of the dollar was innovative, it was powerful, and it basically said, you can either bank with the United States or you're shut out. You'll be de-SWIFT, you'll be cut off from US financial sector. And whether you were a bank or whether you were a country, you didn't want to be a pariah. You didn't want to be left out in the international financial cold, because at the end of the day, reputational risk is everything. And in global banking, it's the dollar. It's being on the right side of the dollar. Now, unfortunately, like many great powers in spheres of influence, the United States has become complacent about the use of the dollar. Now, some say the global financial crisis did not help. Some say that the US democracy has been stress tested at many different inflection points in history. I would argue that a great democracy should always have a stress test. But the dollar has been chipped away by China, by Russia, and it hasn't worked for countries like Turkey, Venezuela, and others. Venezuela left the dollar system, went to the gold, then their gold was frozen in London. So what we've witnessed from 2008 onwards is a multipolar world where a basket of currencies has evolved and developed. So what does that mean? It means if global central bank reserves is below 60%, the euro is rising, other currencies like the pound are rising, but also the RMB, the Chinese currency. Now, the Chinese currency has stalled since 2014. And as we all know, China has used its financial prowess and its debt to use the Belt and Road Initiative to expand its tentacles of power globally. But because the Belt and Road is so effective, it's all done in dollars. All Belt and Road China debt is currently in dollars, dollar contracts. Now, what happens when those contracts 5 to 7 years from now are not in dollars, but they're in not the Chinese currency, but the Chinese digital currency, the digital yuan? Just think of that for a second. So the reason why I titled the talk tonight, The Digital Asset Foreign Policy, is because we've got two world views in the future of money forming, and forming fast. The train is moving. And you've got in one camp, and I call it the authoritarian digital asset camp, China, Russia, Iran, Turkey, Brazil, some Eastern European countries that used to be US allies that are teetering. And they're teetering into the sphere of influence of authoritarian countries weaponizing their central banks. And you may say, what does that mean, weaponizing central banks? It means that these countries, and especially China, is using its central bank to be a surveillance tool of the consumer at every turn, to know how the consumer spends, how the consumer moves, to force major companies in China like Tencent and Alibaba to sign up and to be a good digital asset soldier with the mothership China. And then you have China sharing these digital asset best practices with Russia, because we know that Putin has told its central bank from 2014 and earlier onwards, get off the dollar. We are too dependent on the dollar. The US is going to go after us with sanctions. So we can't be dependent on the dollar. And Iran is a perfect case study. Sanctions worked. It brought Iran to the table. But the beauty of sanctions is that there's a small window where you can create the uncertainty of the market, where you're innovative enough to change behavior. But if you don't innovate, as Louise said, countries go around you. And that's been rapidly happening. So my fear is that China, Russia, all these countries, they're sharing a playbook, a digital asset playbook to weaponize their central banks. And that's where a central bank digital currency comes in. And that means that the country uses its central bank as a digital version of its currency. And I'll give you two statistics to show you the rise of these central bank digital currencies. Every country in the G20, except for Argentina, is exploring a digital currency right now. 90 plus central banks are in a pilot stage for a central bank digital currency. So what does that mean? It means that global central banks, the regulated body for financial institutions, have gotten the memo. And the memo says that the digital order is here. The consumer wants optionality. And the old guard financial system is too slow. It's not enough financial equity for the consumer. It's not inclusive enough. It's not moving faster. Now, central banks probably have similar popularity as our US Congress. And so central banks have taken this torch and they're running with it. And so 2022, in my judgment, will be the year where you'll really hear about central bank digital currencies. So I've discussed with you the authoritarian view of the weaponization of central banks. But then you have the G7, the allied group of countries, whether it's the US and the UK and Australia, and the countries of the greatest generation. And those countries are exploring also a central bank digital currency, but they're focusing on inclusion, privacy, equity, environmental issues, the opposite of what China's doing. And so the big line in the sand is whether the United States creates a digital dollar. You'll hear from Jay Powell in the coming weeks about a white paper, which will talk about a federal digital dollar. And what does that mean? Some say that during COVID and during a national crisis, you want to get stimulus payments out quicker to people. The looming question is, what does that mean cross-border? And then you have the two other buckets of digital assets. So we've discussed central bank digital currencies, and those will be regulated by the central bank. And then the other two buckets are decentralized currencies. So Bitcoin, Ethereum, the 12,000 tokens that are in existence right now, those are unregulated and decentralized. But you do have some central banks using Ethereum. For example, you have the central bank in South Korea using Ethereum in its pilot. The art world has legitimized decentralized digital currencies. Sotheby's and Christie's, the old guard auction houses, they are the central banks of the art world. When a Banksy painting in November 2021 sells for 14 million, but it doesn't sell in dollars, it doesn't sell in euros, that physical piece, it sells in Ether, Ethereum. So in that moment, Ethereum, which is not regulated, has entered that global basket of currencies. The art world is powerful. The art world can't be ignored. And you've got a whole new audience that's interacting through NFTs, but it's an unregulated space. The art world, the equestrian market, these are two of the last unregulated markets. But let's talk about the illicit use for a second of the digital asset market. It's gotten a bad rap, mostly because of a lack of information and a lot of misinformation. And according to a firm called Chain Analysis, which is a lot of former Treasury colleagues, less than 1% of digital assets are illicit. Less than 1%. So whether it's the diamond industry or the equestrian market or the, other industries, there's always an illicit aspect of the market. And so what I see going forward to close, and then we can get to questions, is that the US government can't ignore the digital asset space. It's too large. And so they're going to treat digital assets, whether it's the decentralized space or the stable coin space, as a financial institution. And the regulation and the guardrails will be met at that standard. And what I foresee is I see decentralized currencies like Bitcoin and Ethereum living alongside stable coins, which act as a one-to-one in their fiat currency, which are living alongside central bank digital currencies. And so if Stephen wants to have a digital wallet and he's going to have a basket of currencies, some digital, some not. He may buy art using some of them, different use cases. He may use one currency that's better for travel. He may use one currency that's better for philanthropy. Each of them will have a different use case because the consumer has demanded optionality. And to close, the real question for the United States is whether it will be less complacent, whether it will embark on a chapter of dollar innovation as a national security strategy. And just like the United States benefited from Bretton Woods, the US will create a digital Bretton Woods 2.0, be the convener, and be the digital asset torch that sets the best practices for G7-minded like countries and creates a digital asset wall of innovation against China, against Iran, against Russia, to be geoeconomic strategic. Because in my judgment, being proactive about our financial system is required for the United States to be globally competitive and globally strong moving forward. So with that, I'm happy to answer all of your questions.
Thank you, Michael. Extremely fascinating. And I think a lot of people here come from different perspectives. I'm new to all of this. So I'd like to kick it off with a couple very simple questions. One, based on what you meant, you talked about countries you having digital currency that's named after their own currency? Could we have a digital dollar versus a Bitcoin? And if that's the case, a real low-level question here. When I use my phone to pay, what do I care if it's a digital dollar or a dollar, a regular dollar? I'm swiping at Publix and paying. That's one. Also, can you? Oh, go ahead.
Sure. It's all about choice, Stephen. It's all about what's more efficient, right? So efficiency is going to drive everything, and consumer choice and what they feel more comfortable, more protected, and what works for them and the consumer. And so all of these industries, and you've seen this with Walmart today, getting into digital assets. So if there was ever a sense how this was going to be a fad, Walmart's here. MasterCard and Visa, they're there. The commercial banks, they're going to make themselves relevant because they can't let the train go by. So yes, the United States could create a digital dollar, and it will have a different use case than what Bitcoin will do. Now, Bitcoin is considered a store of value by some. By some, it's considered digital gold. I think, I'm more comfortable with Ethereum, and I'm more comfortable with the technology adoption that's taking place. And so I think that digital payments will be used by some, and there'll be use cases for each of them.
Steve, I want to interfere with something. I said we encourage people here to just raise your hand and speak up, okay? You don't have to ask your questions through chat, though I see some, right. But you can raise your hand and speak up. You raise your hand electronically, but that's fine. I see Tony Grogan and Carol Uberman asking questions.
Right, but Hope posted, so let me read hers first, and then we'll go to Carol and Tony. Hope asks, if tax can be avoided using digital monies, how will countries collect necessary income if people use Bitcoins, et cetera?
Well, I'm not sure I understand the question if tax can be avoided because, right now the SEC, which hasn't really given full guidance, that's one of the issues that's taking place, considers these like a security, like a stock. So I don't believe tax will not be able to be avoided. No. Okay, and the legitimacy of Bitcoin truly can't be legitimate until you can pay your taxes in Bitcoin.
Right. That's a good answer. Excellent. Let me call on Tony. Tony Grogan is one of the people who was at our first event and remember you. So Tony, welcome.
Thank you. Where was the first event? I'm trying to remember.
It's a condominium down on Palm Beach, remember?
Oh, yeah.
We had the dinner. Yeah. Boy, you were there. You asked some great questions, I remember.
I do remember it, but so I have two friends that are invested in Bitcoin and Ethereum, one in Ethereum, and they brag about how they got in early and how they're worth so much on paper these days. And I keep sending them articles about the bubble going to burst. So is that bubble ever going to burst like, the internet bubble burst back in the year 2000 or so, the financial crisis in 2008? How secure do you think the future is of the commercial ones, not the bank ones, but the Bitcoin, Ethereum, etc.?
Well, I think first, if you're using Gemini or Coinbase, there's multiple authentications, and so those are fine. I think that there is a lot of FOMO in the digital asset space, but there's periods of volatility with all sectors. And I think that's no different than the digital asset sector. It's going through a great period of volatility right now. But I'll give you some data that will tell you how it's growing. So OpenSea, which is a platform to purchase NFTs, in 2021 had 720 million users. It's over 2 billion already this year.
Wow.
So there's a lot of activity and there's a lot of use cases being used, and Ethereum has many use cases. But I expect that until there is regulatory guidance and guardrails, there's going to be continued volatility. And I think that's normal with technology adoptions. And if you look at the evolution of the internet, so I don't think it's a bubble. I really don't. I think it's the next iteration of technology, but I do believe there will be many pockets of volatility. Some will short it, some will believe in long term, but I really look at where Netscape was in 1998, and you look at that evolution, I just think we're at a faster evolution right now.
Thank you. Thank you. Carol Huberman. Carol had a question. Carol's a professor of public administration at Barry University, and her area of interest is what is it, Carol? Like illicit funds and so on and so forth. You're muted. We'd like to hear you, but you're muted.
Carol, you're muted. Unmute yourself.
Okay, I didn't unmute myself. I'm a fraud auditor by career, CPA, white collar crime. But I came a little late, and you might have gone over this, and if you did, please just stop me. What is the Digital Dollar Project?
The digital, so I'm on the board of that. And Digital Dollar Project is a evolution of what it would mean for the United States to have its own central bank digital currency. And so they're embarking upon having pilot programs across the United States, a lot of education about what it would mean, and also working with other like-minded central banks. So it's basically arming the Fed, Congress, and others with background and education about what a digital dollar would mean for the US.
So they're talking about tokens. Do you understand what the token is?
Yeah, they're talking about digitizing our currency. Now, some would argue that our currency is already digitized, but basically the difference is rather than you having your account at a commercial bank, you would have a direct relationship with the central bank.
Oh, okay.
That's the difference.
And the last question is, what is Accenture's role?
I can't speak to that. I mean, I think that they're a partner, and but I couldn't speak to their exact role.
Okay, thank you.
But I'm happy to connect to you if you'd like after the talk.
Steve, just one second. I want to just to hook to Hope's question.
No, I was going to go to her question. I was going to go ahead.
I know, but I want to tie my question to Hope's question. If you don't mind.
Me too. I was going to do the same thing.
Okay,
but go ahead.
terrific. Yes.
No, go ahead.
Okay,
Go ahead. You go. All right, let me ask this question in a way that how Hope asked hers. How are cryptocurrencies? how are transactions recorded? In other words, how is a record kept, so to speak?
So digital assets are kept on a ledger. So there's a record for every transaction, which is why it's a misnomer that, you know, you can't track it, because one of the beautiful things about having a ledger is it gives law enforcement a great place to look, and a lot of ransomware rescue operations have occurred because of that. So unlike Hawala, which I spoke to about at the beginning, where there's no notes, no record, you have a record here.
Okay, thank you. Luis, go ahead.
Yeah, well, I wanted to type what Hope is
And
asking.
Ledger is part of the blockchain. The blockchain is the record of use.
That was a question I was going to have. I thought so.
Yeah.
Go ahead.
So, in other words, are you saying, and that I go to the question of Hope, if prosecutors can follow the money? Because part of it is anonymity, part of it is unregulation, and the question is to what extent that could encourage what I said in my introduction, right? The avoiding sanctions, correct? A country such as Iran or Al-Qaeda or ISIS avoiding sanctions. And on the other hand, you know, criminals, drug cartels in Mexico and Latin America, basically also laundering assets. So
yeah, I mean,
I understand from you that you are not concerned about the rise of Bitcoin.
well, I'm concerned, but this is nothing new. This tactic has just evolved with technology. I mean, you know, Louise, these cartels and others, they've operated outside of formal channels for years.
That is correct.
When you become a member of Al-Qaeda, you're taught how to use the courier system. One of the reasons why we caught bin Laden was because we tracked the courier. And so organizations have been doing this for years. They just have evolved with technology. They're very savvy. And so, but there is a data gap in how much illicit use there is. So there's more data in more illicit use in physical art than there is in digital assets.
Wow.
There's more data and there's more illicit use in the diamond industry than there is in digital assets. The only reason that we're mesmerized to think that it's all illicit is because it's new and it's foreign, and it's hard for the mind to get around it. But there are a lot of intelligence gaps on how much of the digital asset market is illicit. And I think that's one of the reasons why the US government and Congress and other agencies will treat stable coins or others like a financial institution, so that it gives it the regulatory guidance to prevent illicit use.
Thank you for that answer. I do want to go to Joel. Joel has his hand up.
Thank you.
Joel.
I met Friedrich von Hayek in 1971.
Oh.
And that was when I learned that the dollar was not what I thought it was. Back in 1926, the dollar was as good as gold, and your paper could be switched for gold coins. Then in 73, I think it was, then we said that the country said that paper could be switched between countries in lieu of currency. But my concern here is that I don't know I have a limited amount of confidence in our currency, let alone all these coins that are being created and not, as far as I know, they're not listed anywhere unless there's something I haven't been listening to. And so, and for example, in like in the 1990s, the US currency was in the $2 billion range, I guess. And maybe I got that wrong, but by this last year, it was $30 trillion was our debt, our national debt. And so what I'm trying to focus on in all of these items is what is really worth taking a risk of your cash or your art or anything else. How do you know the real value of what you're going to be getting if it's so vague?
Well,
Thank you.
Joel, the US dollar, and I have a lot of faith in the US dollar, and the reason why all of us have done well in the past 2 years or longer is because of the US dollar. Is because that sovereigns, our liquid capital markets has been great for the economy, great for business. But the US dollar is based on trust. It's based on stability. And whatever the market is willing to value an item, it's what the market makes it worth. And so there's a value for contemporary art. There's a value for Ethereum. And there's value for having dollars on hand. I fondly remember when I was in the Middle East, it was the spring of 2017, and I was sitting with a central bank governor, and there was a major crisis occurring in the region. Saudi Arabia and the UAE had boycotted Qatar. And I said to the central bank governor, I said, in a crisis, what do you want to have on you? He said, Michael, I don't want a gun. I don't want a sword. I want dollars. I want dollars on me in a crisis. And I believe that still holds true to today. But I do think that it's waning a bit. And we're taking the dollar a little bit for granted. But to your question, Joel, it's all about trust and what the market is willing to pay for it. And if you look at Michael Jordan's shoes from 1983 or Super Mario Brothers unopened, that's worth a certain amount for the market. And the market has set that standard.
Well, why did we go off of that standard in 1926?
Well, I mean, I think we went off that standard mostly because we were evolving as a global financial player. And that was part of, Nixon's move. And we were becoming more of a global economic player. And we used part of our debt strategy to spread our tentacles globally. Now, history may look back and say that was the wrong strategy, but there's a reason why China buys our debt. China buys our debt because they believe in the US dollar.
That's because we're still stronger than they are.
We're still strong. We're still stronger, but we're getting a little full of
Right.
ourselves, and we have to we have to innovate, and we can't, it's hard being ahead of the race the entire time. You keep looking back, you're going to get a stiff neck.
Okay.
Okay, let's go. Thanks, Joel Channing, for that. Joel Levin, you have a question? You've had your hand
Yeah.
up.
Yes, thank you. Can you hear me? Am I mute or am I live?
Oh, you're
No,
fine.
you are
We
fine,
hear you.
Joel.
We hear you.
Okay. That was an interesting talk. Since from a fellow BU law graduate. I had two fairly simple questions. One, if war breaks out in Ukraine, as Biden promised today, to what extent does crypto hamper the ability of the US to punish Russia by financial sanctions? And the other easy question is, how does the rise in crypto limit the Fed attempt to control inflation through a rise in the Fed rate?
So on the Ukraine question, we're looking at some very lethal sanctions. I remember the escalation ladder very well. Russia knows our playbook. We know theirs. We need the EU. We can't do this unilaterally. I don't really view crypto as an issue that's going to hurt the US strategy. It's more that Russia has been able to evolve since 2014, and they've been able to move things around in their economy. If we really want to hurt Russia, it all comes down to Germany. And
but they can sell oil. They can sell oil through crypto in a way that they couldn't 20 years ago.
Well, yes, but that wouldn't be like, it wouldn't rescue them from sanctions. What would really hurt Russia is Germany taking harsh energy actions. So Russia can use crypto and move money around, but I don't think that's going to necessarily, it's not going to be a panacea. I think the United States needs to make a case to Germany, which it hasn't been able to make up to this point. What was your second question?
The second question, I thought you could solve Powell's problem by talking about the effect of crypto on Fed rates. That is, if he's going to control inflation.
Yeah, I think that it's too soon to make a judgment on that. I think we'd have to see the Fed's position on digital assets to really make a determination on that question. So it's too soon for me to make comment on that.
Okay.
Michael, you were referring mainly to Nord Stream, correct? When you talk about Germany, you were referring mainly to Nord Stream, correct?
Yes, correct. Yeah.
Okay.
Yeah.
Okay, so I think we have time for one more question. We're coming up on the hour. Carol, I think you had your hand raised before, so go ahead.
So Michael, you talked about our complacency. So what strategies do you foresee us taking or creating so that we're not complacent? What is it we need to do?
We need to make a national security strategy on dollar innovation to make the dollar work again for the US, not just as a national security tool, but to make sure that countries do not go around the dollar. And I think that's going to have to require a whole government effort. But I think it requires, as I mentioned, creating a new type of Bretton Woods in a new moment like we had in '73. And I think if the United States convened the major countries here in the United States and put together a set of best practices, Carol, I think that the United States could lead once again in the future of money. But that's going to require creativity, innovation, and using a combination of private and public to thrust that. And so I would, if I was sitting in the White House right now, writing a national security strategy, I would make dollar innovation a pillar of that strategy.
Can somebody run on that campaign, run on that, that focus? So whether it's,
I mean, I think,
how would they explain it?
I think they should, and I think what you would run on is that's the heart of U.S. global competitiveness. It's a domestic and a foreign policy issue, and it's at the heart of both of our systems. So if we create dollar innovation here at home, we have levers of power abroad. And I think what's happened in this post 9/11 mentality was that it was just counterterrorism and it was just using the dollar for force. And what we forgot was that the dollar can be used in non-kinetic operations. And we have to get back to looking at it, Carol, in an umbrella of domestic and global competitiveness. That would be the message.
I think that would be a discussion at Woods Hole in Wyoming, or is that, I think that's where they meet.
Yeah, I mean, I think that is something where central bankers have discussed it before. I discussed it with folks out there last summer. The reason why I use the word complacency is because we're very good at admiring the problem. Sometimes we don't even dissect and analyze the correct problem. And so I really believe that we have to put action towards this. And the reason why I talked about central bank reserves dropping below 60% is because there will be a moment where that number goes below 50%. And I'm not sure there's a recourse to make that number go up. And so if our reality is that dollar central bank reserves will continue to drop and that the basket of currency is the reality, the United States has to pivot and figure out a way to adapt to be part of this basket of currencies, but still lead with our values and our strength. And as we all know, it's all about leverage. We have to make sure that we have pockets of leverage for national security, foreign policy, and economic growth.
Thank you, Carol, for that question. Thank you, Michael. Luis, is it okay if I close it out? Did you have a last question or no?
Yeah, well, I really no, I really thought it was really enlightening, Michael. I'm still absorbing parts of this. I think in your last statement, I think I was able to understand a little better what is your idea, and basically you are saying now the United States needs to basically face this new reality and try to see how to eclipse all the competition that comes from this basket of currencies. Which I think it is fine. You don't think, and that's my last question perhaps, you don't think that Bitcoin and all these cryptocurrencies that are decentralized should be made illegal the way Russia and China have done?
Absolutely not. I think that would be a grave error. It's not going to happen. But if we ban innovation, then we are as bad as China and Russia. And that's not who we are as the United States. So rather than being threatened by a technology innovation, I think we need to welcome it with guardrails. And I think that it's too big to ban, and we need to make this work for the United States, because one of the great drivers of our economy was the last technology adoption. and we have to enrich that. And that's part of our future national security, Luis, is to make sure, because if we ban it, then we've lost what I think makes this country so special.
That means you are affecting what is called the market, correct? But we always say, you know, the good ideas should come, or ideas should come from the market, whether we like them or not.
Yeah, we have to embrace innovation, and I believe we will. And that's what you're getting with the metaverse economy and the growing creative economy. And so my advice for everybody listening is follow the art market. The art market is a very interesting barometer into the digital asset space, also on where it's going economically. And the art market is global. And so the players that are coming out of the art market, that's the lens that I would look at it through.
Okay, Michael, those were terrific last words. So let me close this out, and to follow up on what Luis said, we are so fortunate to be part of an organization that attracts such experts as you, Michael, who not only produces scholarship, but also makes a difference in the complex world in which you live. You did a great job making a complex issue more understandable. I thank all in attendance. Without your presence and participation, the center would not exist. And for those who came late, the Palm Beach Center for Democracy and Policy Research is a nonpartisan public policy organization. We are a 501c3 nonprofit, so please visit our website at palmbeachdemocracy.org. Click on the donation button. Your tax deductible donation will allow us to build an even stronger presence in Florida, the US, and throughout the world. And with that, I once again thank you, Michael. Thank you, Luis, for being a great partner. And most of all, I thank all of you for attending, and good night.
Thank you.
We'll see you soon at the next program.
Absolutely.